Hello and welcome to our webinar, our weekly webinar. Thank you so much for joining. And I see we've already got a question, which is great. We're going to get started here in a moment, just verifying that the audio is working before we dive into today's topic. So it looks like we're good to go here. So today's topic is going to be talking about changing a solo 401k provider, what's referred to as a solo 401k restatement, which is a very common topic. Specifically, we're going to be focusing on Fidelity solo 401k and restating that to a self-directed solo 401k, like with our company, and sort of the considerations, the process, etc. So please, thank you so much for joining. Please ask questions in the chat. And we'll address the questions. We'll address all the questions during this session. If you're watching this as a recording, you can ask questions in the comments, or you can email us or call us for more information about your situation. Please like this video. Please subscribe as well, because we do these webinars every week. So here's a roadmap of where we're going. So upgrade, so you're upgrading your Fidelity solo 401k to a self-directed solo 401k. So we'll go over the reasons to switch, like loans, the ability to make Roth or Mega Backdoor Roth contributions, checkbook control, having checkbook control over your money, which relates to investing in alternative investments, among other reasons, and just the full compliance support that you get with our company. The process, how to switch, and then again, how to get more information about your specific situation. So let me look at this initial question though. So this question here is about contributions. So let's get started with the first slide or so, and then we'll come back to that question. I definitely want to get your question answered, so I appreciate you joining. So this chart right here is a great chart. It shows the differences between a solo 401k at Fidelity and a self-directed solo 401k, like with our company, my solo 401k Financial. So number one, in terms of the features, plan document preparation. So with the Fidelity solo 401k, you need to prepare the documents yourself, like the adoption agreement, etc. Whereas, of course, with our plan, we prepare the documents. And so we prepare our IRS approved documents, which allows for loans and Roth and alternative investments. And of course, we draft those documents in a fashion to give you maximum flexibility. So you don't have to invest in alternative investments, but you can. You don't have to make Roth contributions, but our plan allows for it. Number two, participant loans. So if you go and open up a solo 401k at Fidelity, and just to be clear, we're talking about where you get just to define the terms here, we're talking about going to fidelity.com and setting up their plan. So that's going to be a quote unquote free plan, but you're limited in a number of things like we're going through, versus coming to us where we are the plan provider. You're using our IRS approved plan, but we don't hold any of our customers' money. So you can have the account at Fidelity. So if you get the solo 401k through Fidelity, you can't do a 401k participant loan. That's one of the top reasons that people set up accounts with us. Whereas with our plan, you can take a loan. So that's where you can borrow up to 50% of the balance, not to exceed $50,000, but the payments are going to be spread out, equal payments of principal and interest over a 5-year term, or longer if you're using the money to buy your primary residence. We prepare all the loan documents, etc. So with a Fidelity plan, you can't even take a loan. Checkbook control. So with a Fidelity plan, you just can invest in the things that they allow their solo 401k accounts to invest in. So it could be some mutual funds, that kind of thing. Whereas with our plan, you can invest in all types of investments, whatever's allowed under the rules, plus it comes with a free checkbook. Even if the account is just a Fidelity, we will set you up with a free brokerage account at Fidelity where they will give you a free checkbook. Or you could have it at a different brokerage, or you could have it at a bank in addition to having an account at Fidelity. So you can not only have a checkbook, but you get a debit card with a bank. You can ACH money out with the bank. So that's another great feature of our plan. Alternative investments. So with Fidelity's plan, again, you're limited to their menu of mutual funds, etc. Whereas with our plan, you can invest in real estate, notes, cryptocurrency, etc. With a Fidelity plan, you need to have a business EIN. So if you are a sole proprietor, you might be just running your business under your social security number, right? So with a Fidelity plan, you have to have that. You have to have a separate EIN. So if you never had one, you'd have to go and get an EIN for your sole proprietorship. Whereas with our plan, you don't need to have a separate EIN for your business to open up the account. Now, of course, you do need to have an EIN for the 401k, which we get as part of our services, but that's different. That's for the 401k, not for your business. Tax form preparation. So once the value of the plan goes above $250,000, a Form 5500 EZ is required. If you roll money out of the plan, let's say you roll it over to an IRA, or you take a distribution, a 1099-R is required. So Fidelity is not going to prepare that 5500 EZ. They're not going to issue that 1099-R. Whereas we do that for our clients as part of our services for no additional charge. Next item, Roth and Mega Backdoor Roth. So with Fidelity's plan, you cannot make Roth contributions. You can't make Mega Backdoor Roth contributions. That's the strategy where you're taking advantage of the higher contribution limits that apply to voluntary after-tax contributions, where you could be contributing it as much as, for example, $57,000 or even $63,500 as a Roth contribution ultimately in your account per year in 2020. $63,500 if you're 50 or older. So with Fidelity's plan, again, the plan doesn't allow for it, and our plan does. The next one, making contributions electronically. There's a lot of folks that complain about Fidelity's plan that you can't contribute, you can't make your contributions electronically. You got to write a check, right? Whereas with our plan, we'll get you set up with an account where, yes, you can be sending money electronically, like via ACH or wire to the account. And then outgoing ACH transfers. So with Fidelity's plan, you can't ACH money out of the account. Whereas with our plan, we'll get you set up with an account where you can do wires out, ACHs out, etc. So those are a lot of the features that are not always obvious when you're setting up an account, but as you really think through it and with all of our experience, it becomes clear. So before we go on to the next slide, we're going to switch gears and we're going to talk about the process. So how to change plan providers. But before we do that, and I'll encourage folks to ask questions because I know we went through that list pretty quick. So if you have questions, please go ahead and ask. But in the meantime, while you're teeing your question up, we'll answer the question that was asked at the beginning. So other providers have recently told me that if the spouse works in the business, they can also contribute up to $57,000, bringing the contributions to over $100,000 combined. Is that statement true? Yes, that is possible. So if you are self-employed and your spouse is also working in the business and you don't have any full-time W-2 employees other than the two of you, say, that are working in the business, you can set up a solo 401k, because a solo 401k, the technical term is a one participant plan, but one exception is for spouses. Now, the spouse needs to be working in the business. The spouse needs to be reporting his or her own self-employment income. So the ability, even though it's one plan, there are really two participants. One is one spouse, the other is the other. So the ability of each person to contribute to the plan is based on their own self-employment income. It's based on their age. It's based on whether they're making contributions to other plans. So all the factors. But yes, if each spouse is reporting enough self-employment income, they could be contributing as much as $57,000 or even $63,500 if they're 50 or older, bringing the total contributions well over $100,000. So hopefully that answers your question. We do have, if you follow the channel and check out our channel or our website, we've done other videos about contributions and contributing to multiple plans, so that might address some additional questions too. So again, please ask questions as we go through these slides. So the next slide here is going to be how to change providers. So the process is, first of all, with the documents. So again, the scenario we're talking about here is someone that has a solo 401k at Fidelity, right? They went with the quote unquote free plan. And then they're converting over to a truly self-directed solo 401k, like with our company. So a 401k is really it's a type of legal entity. It's a trust. So like any legal entity, it's the documents that create the plan. So the right process to convert that plan over, to switch providers, is called a restatement. So think of that like a cut and paste. So the Fidelity plan documents that govern the account from the beginning are replaced with our IRS approved documents. So we would draft the plan documents. We would need to know the original plan effective date, because the plan is not ending, it's being restated. So when those restated documents are drafted, they're going to relate back to that original plan effective date when you first set up your free solo 401k at Fidelity. We would then get a 401k EIN. So for people that set up a solo 401k at Fidelity, like we were talking about in the prior slide, they need an EIN for their business. That's what Fidelity requires, but Fidelity doesn't get a separate EIN for the 401k. So with our process, we do get a separate EIN for the 401k. That's the regulatory expectation. That's the correct way to do it. And so right at the outset, we'll get that EIN. You'll need, of course, to close your existing account. So even if you're going to keep the account at Fidelity, it's going to be even if you're going to keep the money at Fidelity, it's going to be a new account at Fidelity, because that existing account that you have on Fidelity's books, it relates to Fidelity's plan documents. Whereas when we set up that free brokerage account, what Fidelity calls a investment only account, or what they used to call a non-prototype account, the money or the assets would need to transfer over to that new account. And you might be adding new accounts, right? Because like we talked about, one of the differences between that free solo 401k and our plan is the ability to make Roth contributions or Mega Backdoor Roth contributions, or maybe adding a spouse, like in the situation from that first question. So after we redo the documents, get the 401k EIN, we're going to prepare what's needed to get new accounts set up. So it could be adding on 2 more accounts, or even more than that, depending on the situation. Then the transfer form. So even if you're keeping your money at Fidelity, we still need to complete a transfer form to move the cash and or assets to the new account. And then finally, the bullet here is saying that no final 5500 EZ or 1099R is required. And that goes back to what's really happening here. So the existing plan at Fidelity is not being shut down. If the existing plan at Fidelity was being shut down and then a brand new plan was being established, a final Form 5500 EZ would be required for that existing plan. A 1099R would be required to report the rollover to the new plan. But because the plan is being restated, a final Form 5500 is not required. A 1099R is not required. And I see we've got another question, which is great. Thank you so much for asking that question. So thanks for providing this webinar. I currently have a workplace 401k at Fidelity. Would I have access through the same Fidelity web interface to perform rollovers? Great question. So I'm understanding with that question that you have a former employer plan, or maybe even a current employer plan at Fidelity. In other words, through a W-2 employer. So yes, I mean, you will have access to the account. Like if you set up the solo 401k with us based on your self-employment activity, and you want to have an account at Fidelity, we're going to prepare all the paperwork to get you set up with that free brokerage account, what they call, again, that investment only account. And so you would have online access to that account at Fidelity. So if you're used to the Fidelity website, that's great, right? As far as the actual rollover, if the money is in a former employer plan at Fidelity, Because if it's in your current employer plan, you're probably going to have to quit your job. But if it's a former employer plan, then Fidelity will move that money by check, which is the standard practice in the industry. And ultimately that does protect you, because if the rollover is not reported correctly to the IRS, then you have a good paper trail to show that it wasn't a taxable distribution. It was a non-taxable direct rollover to your new employer 401k. So the rollover is not going to be done on the website, but you would have access to the website. Hopefully that answers your question. So let's give some, and please, I would encourage you, if you have more follow-up questions or additional questions, please jump in. So let's go through some additional considerations for, as we're thinking about changing plan providers from Fidelity to a self-directed solo 401k with a company like us. So if the existing assets, the value of your investments in your Fidelity solo 401k are greater than $250,000, the question is going to arise is whether or not you've been filing Form 5500EZ, because we certainly have a lot of people that start out with, say, a Fidelity solo 401k, and then they convert over to us for all the good reasons, like loans or Roth or ability to invest in real estate. But then as we're investigating their situation, we find out that they haven't been doing the Form 5500EZ because, Fidelity doesn't tell them, or their tax advisor doesn't tell them. So you'll need to file that Form 5500EZ. And if you haven't filed it for the past couple of years, you'll have to do it under the correction program, which is, it's going to cost you $500 per form to do that. It's a pretty straightforward process. It's just a couple page form for each year. And the IRS has, reasonably clear instructions on their website. Ultimately, it would need to be brought up to speed. And then the good news is that going forward, we handle that Form 5500EZ automatically as part of our services going forward for no additional charge. So that was one of the points we talked about at the initial slide, of the difference between the Fidelity solo 401k, the quote unquote free one, versus a plan like ours, where we give the full compliance support, including preparing the Form 5500EZ once the value of the plan assets exceed $250,000. Another important consideration as you're thinking about moving assets over and converting would be your investments. So do you want to keep your investments? Do you want to do an in-kind transfer? If yes, you're going to want to confirm that the new brokerage account provider offers those funds. So of course, if you're going to keep it at Fidelity, the answer is yes, right? But if you have a solo 401k at Fidelity, and then let's say you want to have the account at, say, Schwab, there may be certain mutual funds that you have to have a Fidelity account to hold. So if you won't be able to hold them in that Schwab account. And then as part of the establishment process with us, we're going to, find that out. We're going to prepare the transfer forms correctly to make sure that your investments move over in kind. And I see there's another question, a couple more questions, which is great. Thank you so much for asking. So we'll get through this slide and then we'll get those questions answered. So are there multiple participants, spouses? So if yes, then each participant needs to have a separate account. If they're in addition to that, if each participant has different types of money, right? Pre-tax money, Roth money, then there's even going to be separate sub-accounts. So if you're doing a Mega Backdoor Roth where you have 3 types of money, pre-tax, Roth, and voluntary after tax, and then you have 2 spouses, then you really have 6 different accounts, right? Pre-tax, Roth, and voluntary after tax for each spouse. If you are up against if let's say that you are converting the plan because you want to be able to make a Roth contribution, and let's say it's for the prior year, right? So if you're up against your normal tax deadline, you're going to want to consider filing an extension to ensure plenty of time to make contributions, because there is a time, it does take time. I mean, with us, we move very quickly. We would prepare those restated plan documents within 1 business day. Same thing with a business day to prepare the Fidelity account opening documents, but it's going to take time for Fidelity to process opening up the new accounts and moving the assets over, et cetera, et cetera. So let's look at these questions here. Again, thank you so much for asking. So the first one is I have a simple IRA at Fidelity. I know there's a 2-year hold on rollovers from a simple to a solo 401k. Do you handle those kinds of rollovers? Absolutely. But yes, you would need to make sure that you're eligible to you're beyond that 2-year period so that you can transfer your assets over. You can, as long as you have the special rules with simples, you can't transfer money from a Roth IRA. Any type of non-Roth IRA, though, like a SEP or a traditional or a rollover IRA, you can transfer that over, and we prepare the transfer forms as part of our process, right? Because that's what we do every day, and we want to make sure that it's done correctly because, of course, that transfer, even though it's not going to be a taxable transfer, it's a reportable transfer, so it's going to be important that all the forms are prepared correctly so that it is reported correctly. Next question here, are there any maximum size limits for a Fidelity 401k managed by my solo 401k? What if, as an exaggerated example, someone wanted to roll over $50 million into a 401k? Same fees? Yes, our fees are not dependent at all on the value of the plan. So we charge a flat $550, which is everything for the first 12 months. And then we charge, $125 a year starting 12 months later. So another way to think about it, it's $425 and then $125 for the first year for a total of $550, and then $125 a year starting 12 months later. It's totally flat, and it covers all the ongoing compliance support, like doing the 5500 EZ, 1099-R if that's required, preparing loan documents, etc. The accounts that we would help our customers set up at Fidelity, those are free accounts. So those investment-only accounts, Fidelity doesn't charge anything to set those accounts up. There's no maintenance fee. They even now have free online trading, as a lot of these brokerage firms are offering that type of free online trading option, and that does apply to these types of accounts. Okay, great. Thank you so much for those questions. So we'll keep going here. So let's talk about the support. So once you move everything over and you convert it to the self-directed solo 401k, we are going to provide all the ongoing compliance support. And like I mentioned to that last question, it's a totally flat fee structure. So you know exactly what you're signing up for. You can be confident that whatever you need, you're not going to have to pay more for that type of support. So Form 5500 EZ, we've touched on that already a little bit, but again, that is the form that's filed with the IRS, but it's not triggered until the balance exceeds $250,000. And it's really a snapshot as of the end of the year, so December 31st. And then it's going to be due to the IRS by the 7 months later, so by July 31st of the following year. 1099-R distribution, we've touched on that also. So if you're rolling money out, if you're taking a taxable distribution, if you are converting money from, say, a pre-tax account to a Roth account, or even an after-tax to a Roth account, those are all reportable events. And we handle the 1099-R form as part of our process. Again, no additional charge. Solo 401k IRS required plan updates. So there's a major update. At this point, it's probably going to be in 2021. That's going to be coming up here. You also have more minor updates. So all of those plan updates, we handle those as part of our service. There's no additional charge for that. I know that some companies out there do try to charge for the major updates. It's almost like you're paying again for the plan, whereas we don't have that structure. We never have. So that is very important to keep the plan in compliance. You need to have those updates. Contribution calculation. We're fielding questions every day, from customers in terms of the mechanics of their plan, like contributions. How much can I contribute? How do I report it? We do client-only webinars, and we do these types of public webinars as well. So we give a wealth of information on our website or through these types of channels to help our customers understand, because it's not always straightforward, right? I mean, you've got different situations. There's different factors like what type of contribution, what's your age, what your self-employment income is, things of that nature. Loan documents, that's another one of those top reasons that people set up accounts with us, is because our plan allows you to take a 401k participant loan. But in order to do it correctly, the loan has to be documented. So you've got your payment schedule, your note, so those types of things. So we turn those documents around within 1 business day, so you can take that loan right away. You know, you might want to use that to buy a house. You might want to use that to pay for your kids' tuition, things of that nature. And then you're just paying it back to your future self, right? You're paying it to your 401k. Again, equal payments of principal and interest, like we talked about before. And I see we've got another question. Thank you for asking that question. So we'll just go through the rest of the list here, and then we'll answer questions. So if you have any more, please, if anyone else has questions, please ask. So alternative investments. So again, the compliance support there is that alternative investments, a common example, again, one of the top reasons would be investing in real estate. And so we are fielding questions, inquiries from our customers in terms of the mechanics. So our customers know what they want to invest in, but they are relying on our expertise in terms of how to do it correctly. Like if I want to buy a rental property, how does it get titled? How does the money flow? How do I pay for ongoing expenses? Those types of questions. And then account setup. So as part of that establishment process, we prepare all the paperwork. I mean, we've been talking about setting up the account at Fidelity. We prepare all the paperwork to set up the free brokerage account at Fidelity, but you might also want to have a bank account. You might be wanting to invest in cryptocurrency. So we help so many of our customers navigate the process to get money to a cryptocurrency exchange in the name of their solo 401k, where they can invest in Bitcoin or other types of cryptocurrencies. So that's another great example of the type of service and ongoing compliance support that we are providing. So let's get back to the questions. So we've got, and thanks for that positive feedback. I appreciate that. So do my solo 401k provide Fidelity's support the ability? So I think I understand the question here is, I think essentially you're asking if our plan allows for rolling out after-tax money to non-401k Roths on an ongoing basis. So I think the question here is the scenario that we're posing, which is a common scenario, is that you set up the solo 401k with us, whether it's a new plan or a restated plan, because you want the ability to make voluntary after-tax contributions, the so-called Mega Backdoor Roth contributions. But instead of transferring it to the 401k Roth sub-account, so the Roth 401k sub-account, instead of keeping it in the plan, in other words, you want to transfer it over to a Roth IRA. When we say non-401k Roth, that's what I understand. So the answer is yes. You can transfer it from a voluntary after-tax sub-account to a Roth IRA. And so our plan does support that. That is, again, a reportable event, just like if you were to convert it to the Roth 401k sub-account, and we will handle that 1099-R as part of our services for no additional charge. So great question. No, I appreciate all the questions. No worries on the grammar, but let's go to the next slide, and I'll let people ask more questions. We've got time, so I appreciate all the interaction and feedback. So if you want to find out more about your situation, please contact us. You can email us at business@mysolo401k.net. You can call us at 1-800-489-7571. If you're watching this on a video and you just have a quick question, as a recording, I should say, you can ask in the comments. And I see we got another question here. So, and I appreciate everyone's time in joining. Please like this video. Please subscribe for more videos like this. So the next question here is, are there any restrictions on how often someone can do the rollouts? Several times a year? Okay. No, there are no restrictions. Yes, you can do multiple rollouts. We have a process that we guide you through to document each rollout. We want to get each one documented separately. And so but then it would just get aggregated into one 1099-R at the end of the year, showing the total amount transferred for that prior year. So we'll see if any more questions come in. Again, thank you so much for joining. And if there's no more questions, please please join us next week for our webinar next week, and hope everyone has a great day. Let's see if we got any more. So thanks everyone. Have a great day.